right, so what is happening, everyone? We've had an incredible run up here in the last 10 days on the S&P 500 futures contract. We went up for about 10 days straight. Yesterday, we pulled back and we started consolidating today. And as we were going into the open today, looking at the chart and looking at the news, we had no news to speak of. Today, by the way, is July 8th, 2025. So yeah, we had no real news to speak of today. We had Trump cabinet meeting at 11 a.m. So I really didn't think we were going to make any big moves this morning on the opening range with everything combined. So I did what I do in those situations, which is just shoot for my 10 ticks. And I was able to get it off the top side of the range. And then again off the bottom side of the range. So there's 5 total ES points today, rather safely. Um, I am looking here on our stats. We've got 42 days loaded, 42 trading days out of the last 60 total days, 2 months worth of data we're looking at right here. And, we've still got a 90.5 win rate at 10 ticks. And that is with a stop of 66 ticks. And before you get all worked up that that's such a backwards risk reward, let's just talk a little bit today about expectancy, what it is, and let's look at all of these stats in terms of expectancy, because expectancy plays into our psychology. Um, Many people jump from strategy to strategy. They get a strategy, it wins for them for a couple days or a week, and then on their first day or two of loss, they jump to a new strategy because they just can't handle the loss. And the problem is that when we are talking about trading, we're looking at our gains over time. So, you know, what happens over the course of a few months or a year has no relation to what happened today. And we need to know what our expectancy is on our strategy. And so with Scalpers Hideout DayBreak, with this tool right here, we can get a firm handle on our expectancy of this strategy. And we're going to take a look at some of these stats, and I'm going to show you a spreadsheet that kind of shows you over at least what I have loaded here, which is 60 days. This is 2 months worth of data and 42 trading days. So let's take a look. So the basic definition of expectancy in layman's terms is the amount that we can expect to win or lose over time. And it is impossible to calculate your expectancy without detailed journaling, spreadsheets over a long period of time. Um, when we were making Daybreak, I wanted to give some stats on the screen that would help us a little bit with our expectancy calculations. Um, it's really important to know. It keeps us sane. It keeps you from going home and crying in your beer every night if you have a losing day. Wouldn't you like to know that at the end of the month you're going to be profitable by $3,000, let's say? Wouldn't that help you to not overtrade today or revenge trade today, knowing that you were going to end up net positive at the end of the month when your bills are due? So we went ahead and built in some pretty complex calculations here into this opening range break trader in the attempt to prove what we hypothesized, which was that the opening range break was a positive expectancy strategy. But you only get, one a day for each type of opening range break. So, you're taking the 15-minute opening range break, the first side of the opening range that it breaks. You only get to experience that once a day. So it takes a lot of time to collect data. Going back into replay, you can do it, but again, you've got to sit there and collect the data. But we have built a tool that does it all for you. And we're going to take our statistics a step further here and look at expectancy in terms of dollars. So, real quick here, I'm not going to go in depth here into the actual indicators workings. There is another video called the Notorious ORB that we posted just about a week or two ago. I'll try to link it at the end of this video with a card in the outro. So you can go back and watch that as if this is your first time seeing this. But just a little basic idea here. What you see on the screen is the opening range that forms in real time as it's being created. The two thick orange lines are the actual opening range. The thinner orange lines that are shaded in between, those are the extensions of the opening range. And this indicator auto trades, which is how we use it. It enters multiple types of orders. You can enter market orders, stop limit orders, whatever you want. And up in the top right hand corner of the screen, you see our cool stats panel. So taking a look at this stats panel, it tells us a few things. It tells us how many trading days we're looking at. It tells us the range that we are defining. So it's from 9:30 a.m. to 9:44 a.m. in 59 seconds. So that's the 15-minute opening range. It tells us what the high and low of the range are. It tells us the size of the opening range, and it allows us to compare this opening range to prior opening ranges in size. We can make some deductions there as far as how much we want to risk based on the size of the range. I believe that some ranges perform better than others based on size. Not always, but in general, I have seen a correlation there. So it also tells us the largest range we've had in the series and the smallest range we've had in the series. And then it allows us to set a number of hypothetical target ticks and stop loss ticks in the settings. And we can see win percentages based on our entries here. So I've got 10 ticks, 20 ticks, 30 ticks, 40 ticks, and 80 ticks set up as my targets with a 66 tick stop loss. We also, the thinner orange lines of the range are multiples of the range. They're extension lines. So they are percentages of the opening range. So we have zero point 0.5 times the opening range as our first line. That's half of the opening range. And the second line is 1 times the opening range. And the third line is 2 times the opening range. This is all adjustable to your liking in the settings. So let's take a look here at our target ticks. So target one over the last 2 months has generated a 90.5% win rate. That means that it hit the 10 tick target before the 66 tick stop loss 90.5% of the time. And the reason I have 66 tick stop loss is because I just got used to using it. I end up moving it myself anyways to the back side of the range. But since the average range size here, you can see is 61 ticks, that just gets us close when it enters the trade. So looking at these stats, target one at 10 ticks has won 90.5% of the time. Target 2 at 20 ticks has won 81% of the time. Target 3 at 30 ticks has won 73.8% of the time. Target 4 at 40 ticks has won 71.4% of the time. And target 5 at 80 ticks has won 50% of the time. So what do we do with this information? You're probably looking at target one at 10 ticks and you're thinking to yourself, all right, 90% of the time, I'm going to get my 10 ticks out of this. So I'm just going to shoot for these 10 ticks all the time. And you can do that. But when you get up into the higher numbers, we look at target 4, 40 ticks is 71.4% win rate over a stop loss of 66 ticks. And so I'm sure you're still thinking to yourself, my risk reward is backwards here. At 30% of the time, we're going to be hitting a 66 tick stop loss. And, you know, the other 70% of the time we're gonna get our 40 ticks. It might not look that appealing to you. You might just be saying, I would much rather go for the 90% win rate. What I did is I plugged all these numbers into a spreadsheet that I'm working on, and I'm going to show it to you right now, and you're going to get a whole different view of expectancy. All right, so here are the same numbers we were just looking at in Daybreak, and I wanted to extrapolate them to dollar values. So you could see that you can never judge a book by its cover. Um, but the very first thing before we start looking into all of this is look at the total P&L column on the far right. It doesn't matter what target we chose. We have a positive expectancy for the opening range break across all the options that I have listed here. Whether the risk reward is positive or inverted, we still have a positive expectancy. And so that ought to let you know that over time, the opening range break has the ability to make you money. And with these particular settings, I mean, and there's nothing especially good about these settings. I mean, we have a 66 tick stop across the board, and the first four rungs of this ladder, we have a negative risk reward on these trades. It's only once we get to the last 80 target ticks that we start getting into a positive risk reward scenario. It just goes to show how good the opening range break really is over time. Now, that does not mean that you're not going to have three losing days in a row. You have to size appropriately so that you don't get blown out. But we're talking about 2 months of data here, a whole 60 trading days, and we are still at a positive expectancy. So we can extrapolate this over time as far as we want. I don't have the data loaded in my machine right now to go, 6 months or a year for you here. But 60 trading days is a nice little a nice little sample size for the last 60 days. So anyways, so here's the same data that was plugged in before. So we have our target ticks of 10, 20, 30, 40, and 80. Our stops are 66 across the board, and the same win percentages that we had in the other screen, and the same total number of trading days. And so I made a little spreadsheet. I just made a little simple calculation to calculate the winning and losing days, how many ticks that produced for winners and losers, and how many ticks we had for our net ticks at each target level. I'm running this based on the ES, so the tick value is 1250. So for our 10 tick target, we had 116 net ticks at the end of the month. It had a 90% win rate, but we had 116 net ticks at the end of the month. And that gave us a total of $1,459.50 over the course of the 60-day period. Um, there's 42 trading days in the 60 days. That's why those numbers are different. But I've loaded up 2 months there. Um, for our 20 tick target, we had 153 net ticks at 12.50 a tick, and that netted us $1,921.50. At our 30 tick target, which only had a win rate of 73% compared to the 90% of the 10 ticks, we had a win rate of $2,545.20. The 40 tick target with a even lower win percentage at 71%, 71.4%, we had a total there of $5,084.10. And our 80 tick, our farthest target, it had a 50% win rate, and a total of 294 net ticks, and it gave us a net profit of $3,675 over the last 60 days. So there you go. These results were kind of unexpected for me. I knew that we were going to have some interesting numbers with lower win rates. 73%, by the way, is still pretty good. 71% is still pretty good by normal terms. But I did not realize that we were going to have such a discrepancy in the actual dollar value and the actual net ticks produced by these um, by the 40 tick target. That basically shows me right there where my sweet spot is now. I will be running Daybreak every day with a 40 tick target, and I will try to be putting as many contracts as I can afford behind that. And remember, these are all pliable. These final numbers are all pliable depending on your account size and the amount of drawdown you can withstand. So you can kind of figure out some basic math here. If we have a 71.4% win rate, that means we're going to lose 12 days out of the 42 days. So you do need to make sure that you're sizing appropriately because there's another term called distribution where we don't know how our wins and losses are going to be distributed. They could be all in a row, or they could be spread out sporadically throughout the 60 days. And probably we'll see if I can add some more stats to help us with that in here in the next revision. But the main purpose of all of this is really just to show you that the opening range break is a tried and true strategy for a reason. Um, it is positive expectancy in all five scenarios that we tested. And in between the 40 ticks and 80 ticks here, I'm going to go back and put some more increments in there and look at those stats too. Since these had about the same since the 30 and 40 had about this, roughly similar win rates, and they had the same roughly amount of losses. The extra 10 ticks in there uh, was able to generate a radically different end result. So who's to say what 50 ticks is going to do? I'll have to go back and look at that. If we're anywhere near 71%, and we get an extra 10 ticks on that, that number is going to be higher than this. So opening range break, here's who it's good for. It's good for people that don't have a lot of time to sit behind the computer. They can't sit there all day. Maybe you can trade the first hour of the market each day. It's good for you. It's good for somebody who is into longer, slower growth. Somebody that wants to trade, that wants to be active in the market, but also, doesn't want to necessarily be a scalper. You can do this each and every day. And you don't just have to take one. You can create up to about 10 trades a day with this. The other person that this is good for is somebody that just wants to get positive in the morning so that they can absorb a potential loss trading later in the day. Either way, it's just a kind of a good way to start the day while the market's crazy. It's kind of, if you like to wait for an hour in, you can take the 15-minute opening range break with some actual stats. And that's what I've attempted to do here for everybody is just to kind of say, take a look at this as far as maybe an addition to your current strategy. And you are not going to find a better indicator or tool or auto trader to help you with this than Daybreak. So come on over to our website, scalpershideout.com. Check out everything that we offer. We offer a lifetime subscription for everything, which has about 20 different tools in there, of which this is one. And for the meantime, it's not going to be for very long, but for the meantime, you can buy Daybreak a la carte, so separately, for a very reasonable price. So if you've ever wanted something like this, that you can have stats on your strategy and know what your expectancy is, this is for you. Keep in mind too, it's not a one-dimensional tool. I've used this to trade news. The other day I passed hypothetical eval in 2 seconds during non-farm payroll using this. You can trade this. You can set any time frame you want with this. So you could set this on the candle before the market opens to catch that opening move. So yeah, come on over and check it out. You can get this by itself, like I said, and it won't break the bank. Talk to you soon.